Julia, help me, I'm confused. We're talking about Tata Motor today, the darling of the global auto industry, Indian car maker, and it owns Jaguar Land Rover, and Jaguar Land Rover has been a success story, or so I was led to believe. But this morning there was a trading update. What did they say?
Well, I think this is it, because shares have gone up so much, tenfold over since the financial crisis, and so expectations for this company are very, very high. So today's trade update was therefore a little bit disappointing. So for Jaguar Land Rover, they're saying that revenues will be up a little bit, but earnings will be about the same, so therefore margins are going to come down a bit, and that's why everyone's knocked a little bit off the share price. That, combined with the fact they're boosting capital expenditure quite a lot, which is going to hurt free cash flow going into the next financial year starting in April. So that's why the shares dropped off quite a bit today.
And so why are margins falling? What's going on?
Well, the latest quarter was a little bit more about shifting older models, so they're trying to kind of clear out the older Land Rovers mostly, and also a kind of product mix, so selling more fuel-efficient cars which are a little bit lower margin. So it's really a product mix issue, but moving into the future, they are going to ramp up production quite a bit, and that might have an impact on margins. They're going to shift, or they're going to launch new products. So you'd expect marketing, therefore, and spend to be quite high. So it could be that margins sort of taper off a little bit from here.
And how important is Jaguar Land Rover to Tata Motors?
Oh, very important. So it really is the majority of its earnings. So I think about 88% of profit before tax. Very significant, because the Indian car market, where Tata sells its own cars, is still quite challenging and hasn't been doing that well for Tata.
Are we seeing any improvement in the Indian car market for Tata Motors?
Not as of lately. We'll have the full update at the end of the year, but the problem there is that interest expenses have been quite high. A lot of people buy on credit, so that has been hurting that market quite a lot, even though there should be potential demand, but there's this interest payment which hurts the sales there.
And how much of this problem do you now think is in the price? How is Tata Motors trading?
Well, it dropped off a bit today, so we're now down, just below 8 times. It's a discount to companies such as BMW. There's a reason for that discount to do with how they account. So Tata, essentially, through amortization, means that their earnings are a little bit over-egged. So it means that they're sort of close to BMW, which is probably about fair. But given that margins aren't really going to grow from here, then I would say it shouldn't go really above 8 for the time being.
So the valuation sounds all right, and sounds like we're going to have to wait for the full Tata Motor results out soon. Thanks very much for that update.